Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Let's begin from the global oil market as prices rise this morning, extending more than a week-long rally after industry data showing a fall in U.S. crude oil stocks added to optimism about an expected rise in global fuel demand. Brent crude was up by 11 cents at $61.20 a barrel after rising nearly 1% on Tuesday when it touched the 13-month high. U.S. crude added 2 cents to $58.28 a barrel. Crude inventories fell by 3.5 million barrels in the week to February 5th to about 474.1 million barrels, according to data from the American Petroleum Institute. The world's biggest exporter, Saudi Arabia, is unilaterally reducing supply in February and March, adding to cuts agreed by other members of the Organization of the Petroleum Exporting Countries and their allies. Some analysts are now forecasting there will be a supply deficit in 2021 as more populations get vaccinated and start going away on trips and working in offices, potentially boosting fuel demand. And since the outbreak of the COVID-19 pandemic, the federal government has ensured that businesses stay afloat through its interventions, cutting across all sectors of the economy. One of such interventions is the payroll support system, which provides support for owners of businesses with payments to their staff for a period of 3 months. While efforts are on to ensure that more businesses benefit from the scheme, officials of the Bank of Industry are optimistic that the scheme will help businesses thrive in the face of the pandemic.
Globally, the COVID-19 pandemic is taking its toll on businesses, leaving government with the option of seeking ways to reduce its impact on jobs and income of workers. It's in this light that beneficiaries of the federal government's payroll support scheme, a component of the MSME Survival Fund, converge on this venue to narrate how the intervention is supporting them after the COVID-19 pandemic took a toll on their businesses. The fund, according to the Bank of Industry, is expected to place affected businesses on the path of survival and sustainable growth.
The way the program works is that businesses who have been affected will apply through the portal. They will put in the requirements that the portal requires, and then those that qualify, some will be selected. This program is to give money to pay salaries of a certain number of employees of those companies for 3 months. So they will receive a 50,000 naira payment for 3 months.
The payroll support scheme provides payment support to qualified private schools, hotels, road transport workers, and creative industries for a period of 3 months. Some of the beneficiaries speak on how it's impacting their businesses.
The intervention came on time because it was able to help us sustain our staff, and then at least they were having something instead of no salary completely.
We are wondering how we'll be able to take off. This initiative came up and we keyed into it, applied as the information came, and we decided to go to the platform and key into it.
An official of the Bank of Industry gives an update on the total number of businesses validated.
About 64,000 companies have been verified. A lot more of them applied. About 311,000 individual employees of these companies have received these benefits. Some have elapsed because they've run through 3 months of the program. Some are in month 2, and some are in month 1, and some will still benefit.
Last year, the federal government announced a rollout of a 2.3 trillion naira stimulus package and survival fund for micro, small, and medium enterprises to stay afloat amid the economic challenges caused by the COVID-19 pandemic.
Well, on the 29th of January this year, the Lagos Internal Revenue Service issued a public notice informing taxpayers of its grant of extension to the deadline for filing 2020 annual employees pay-as-you-earn tax returns by 2 weeks. Now, based on the LIRS's notice, companies can now submit their payee tax returns, which were due on the 31st of January 2021 by 14th of February. That's just in few days. Now, are there consequences for failure to do this? The chairman, Lagos Internal Revenue Service, Mr. Ayodele Suber, joins us next. Good morning, Mr. Suberu. Thank you very much for joining us on the program.
Good morning. Thank you for joining us.
Good morning. I'm happy to be here.
Yeah, the Lagos State Internal Revenue Service had announced an extension of the deadline for filing payee returns. Could you throw some more light on the significance of this extension and its impact on taxpayers?
Okay, thank you very much for that question. Well, we thought that it would be beneficial to both the state and to the taxpayers if we extended, because we looked at certain indices. We looked at the number of taxpayers that had filed as at the last day of the month of January, and we compared it to the number of taxpayers that had filed in the previous year, and it was a bit lower this year, coupled with the fact that we're a very good listening organization. A number of taxpayers actually appealed to us to see if they could get an extension. You know, in Nigeria, we like last minute. We do everything at the last minute. People have 4 weeks, but it's the last week, just before the deadline, people start to file. So we give them a listening ear and decided to extend it by 2 more weeks. So we expect that all the employers will file by the 14th of February this year.
Okay, Mr. Suber, given the severity of the impact of COVID-19 pandemic on most taxpayers, is this 2 weeks enough, considering how much havoc the pandemic has wreaked on businesses? Shouldn't the tax authorities be offering tax cuts instead?
Well, I guess you can talk of the LRS coming up with tax cuts, but I need to remind you that we operate under federal laws. The laws are legislated through the National Assembly in Abuja. So we really have no say on the actual rates that are charged. So we cannot offer tax cuts. But last year, we came up with a few of tax reliefs and palliatives. And this has since expired on the 31st of December. But definitely we cannot introduce tax cuts because the legislation is federal.
Now, there have been complaints that the burden of payee on salary earners is too severe and affecting disposable income. Yet, these taxpayers incur a lot of expenses on what the government ought to have provided. For example, they pay exorbitantly for education of their children and healthcare, of which are provided by the private sector. They also depend a lot on generator for power. Private security guards are paid for in many locations, refuse collection by the PSPS, provision of borehole for water supply, and so on. So do we have enough reliefs to accommodate all these expenditures borne by the citizens? Would you say that the payee is equitable in its present form?
Well, unfortunately, I don't have any powers over development or infrastructure. My own part of the deal is to try and raise revenue for the state. And then the state, in its infinite wisdom and through a dynamic governor, Mr. Babajide Sanwo-Olu, he brings in all the various measures and policies that would lead to development, such as infrastructural development, and the provision of qualitative social services. So I can't really comment on that side of things because we are just there to raise revenue for the state based on the tax laws.
Okay, but moving away from that, for you as an agency, how much impact would you say the COVID-19 pandemic has had on your revenue collection?
Yes, the COVID, the pandemic has been a bit devastating, but because of all the various measures that we had put in place, namely computerization of of our tax administration. We got a lot of respite from that. But numbers went down. The budget at the beginning of last year was 500 billion for the agency. But when the pandemic struck, just like it was done globally, there had to be a revision. So there was a revision from 500 billion to 350 billion. So, of course, we had to put in all our initiatives and all our strategies to try and still come up with the revised amount. And we deployed all our infrastructure, including our end-to-end tax administration solution, including the contact center, which was of tremendous help in terms of solving taxpayers' enquiries and clarifying all the various information they needed to continue to comply with taxation. So we had all the software, we strengthened, we came up with a business continuity plan. Through our business continuity plan, it was clear that for us to succeed, we would have to operate remotely with the taxpayers since they could not leave their homes or their offices. So this greatly helped us, and we're glad to say that we made 102% performance on our budget. So yes, it's there. It's a bit devastating. It's had an impact, negative impact on revenue. But in terms of our ability to cope, we have coped quite well.
All right. Now, looking at this deadline, that's in few days, February 14, are there any penalty for a default at this point?
Yes. Section 81 of the Personal Income Tax Act spells out the penalties for default. So as an employer, in filing your return, we call it the H1 return, there's a penalty of 500,000 upon conviction for non-filing or contravention of that rule. And for individuals, it's the fine is 50,000, also upon conviction.
Anyway, looking at the level of taxation and different taxes, the organized private sector believes that the Nigerian businesses are overtaxed. They pay company tax, VAT, education tax, import tax, excise duty, ports levy, among others. And they're paid to regulators and sometimes to touts. What's your take on this?
Well, we educate and enlighten members of the public all the time. And we tell them not to patronize touts at any level. We do not collect cash for taxes. Everybody is supposed to pay their taxes through the recognized deposit money banks. So there's that level of transparency when it comes to the payment of taxes. We constantly warn people not to use touts. Now, we at the state level, we have stated taxes, which are mainly pay-as-you-earn taxes, the stamp duties, capital gains taxes. So they are well spelled out, they are clear, and we constantly educate. It's on our website. We do a lot of pamphlets. We do a lot of, we take out a lot of adverts in newsprint, on TV media. The aim all the time is to ensure that all the residents of Lagos are very well aware of all the taxes that exist.
Now
a lot of members of the public might confuse administrative charges and levies and keep on saying it's a multiplicity of taxes. But really and truly, these are for specific services that are usually provided by some agencies and in a lot of by the local governments. So you will never find a situation where you are paying taxes, regulated or enforced or implemented by the Lagos Internal Revenue Service. You will not find any that you have to pay twice. So there's a bit of misconception on this issue of a multiplicity of taxes. Maybe administrative charges if one local government at one end charges you and another local government has its own tax types. There might be an issue with that. But the state is seriously looking at this presently, and we're looking at how to harmonize all the taxes. Now, I use the word taxes, but they are really levies and administrative charges.
Now, in all of these, you will understand that these are not the best of times for many businesses. So do the tax authorities take this factor into account in the quest for internally generated revenue?
Well, like I told you, we are quite restricted in the way we can work. We're subnational, we exist within the Federation. The Federation has its tax laws, and all we do is implement. We do not really have a lot of room for discretion because taxation is based on income, is based on earnings. Now, on the other side of things, where people, like you said, have to buy generators and all those things, it's not on us, if I can put it in a very simple way and manner. We're subnational, and we just ensure that the taxes, people comply with all the tax laws.
Okay, so the informal sector is about 50% of Lagos economy. What is this percentage contribution of this sector to the state's IGR?
Well, if we go by the trends and the immediate past, the contribution of the informal sector has not really been great. I must admit that the largest portion of taxes that we generate are from pay-as-you-earn taxes. But we have come up with a lot of solutions, and we have a strategy that is about to be implemented. We're actually out in the markets now. And the whole idea is we call the initiative the Ibile Hub Initiative. With this initiative, we are going to work very closely with the heads of the markets and the associations and the unions. Through them, we're going to be able to share information, share data on all the people that constitute this informal sector that we speak about. Now, one key thing about them is that most of them are daily earned, they earn their living on a daily basis. So they cannot pay taxes maybe in the region of 10,000, 20,000, 15,000. So what we have done through this Ibile Hub, we have developed a software, and using that software, we are going to allow installmental payments. So the basically apprentices, the tradesmen are going to be able to make their payments on a daily basis if they so wish. And that way we're hoping to attract a lot of taxpayers so that we can cover the field. So, we really have plans to improve tax collection with the informal sector.
All right. So February 14 is it? No going back, yes or no?
No going back.
All right. Thank you very much, Mr. Sibyl. Thank you very much for your time.
Thank you.
Thank you very much. Thank you for having me.
We'll take a break now, and coming up next, FX Commodities Market Update. Do stay with us.
And the Economic Commission for Africa estimates that the AfCFTA has the potential both to boost intra-African trade by 52.3% by eliminating import duties, and to double this trade if non-tariff barriers are also reduced. How would Nigerian commodities market benefit from the AfCFTA? We'll be talking to the Chief Executive Officer of AFEX Commodities Exchange, Mr. Ayodeji Balogun. But first, let's get the commodities update with Michael Martins, Portfolio Manager at AFEX Commodities Exchange. Thank you for joining us. Yeah.
Thank you very much.
Yeah.
Good morning.
Please, good morning.
My name is Michael Martins, presenting to you. Yes.
Great to have you. Great to have you. So please take us through the commodities market summary for the week and their major drivers.
Okay. Good morning. My name is Michael Martins, presenting to you this week's AFEX Commodities Market Update. So over the course of the week, The total value of transactions executed on the exchange went up by almost 400%, from around 1.25 billion naira to around 6.28 billion naira. The total number of contracts executed on the exchange also went up by almost 400%. We, however, saw a 45.95 decrease in the total number of deals executed on the exchange from around 109 to 63. This indicates a higher value per deal for this week in comparison to the previous week. The AFEX Commodities Index, which is the ACI, went up by 3.30% over the course of the week, while the AEI, which is the AFEX Export Index, remained unchanged over the course of the week. Moving on to volume. You would notice that the total volume traded on the exchange this week in comparison to the previous week was much higher, with maize being the major protagonist, going up by more than a factor of 7, from around 27,190 to more than 193,000. The other commodities which went up in volume, in traded volume over the course of the week, was ginger, which went up by more than a factor of 4. Ginger very often indicates international interest, with international buyers looking to buy locally produced ginger as an alternative to buying from the Asian market. The other commodity which went up in traded volume over the course of the week was sesame. All other commodities were traded less this week in comparison to the previous week. Moving on to price. The maize contract value went up by 4.34%, adding just 830 naira to the contract value over the course of the week. The soybean contract went up by 4.17%, adding just an approximate percentage to the value of the contract over the course of the week. Soybean, however, went up ever so slightly by 0.27%, adding just 50 naira to the contract value over the course of the week. All of the commodities comprising sorghum, ginger, cocoa, and sesame remained unchanged over the course of the week. The fair trade exchange traded commodity, which is the FETC, went up by 2.49%, adding more than 300 naira to the value of the contract over the course of the week. My name remains Michael Martins, and this is the AFEX Commodities Market Update. And I will see you again next week. Thank you.
Michael Martins, just before we let you go, there, you talked about the FETC there. What is the component of FETC?
So the FETC currently comprises of maize, soybean, and sorghum. But the way it was designed, it currently only comprises about 100% maize for now anyways. So maize, like soybean, and sorghum, to answer your question.
It's like a basket of these commodities. All right. Okay.
Essentially, yes.
Sure. Let's look at the commodities exchange and the AFCFTA and Mr. Balogun, the Chief Executive Officer of the AFEX Commodities Exchange now will be joining us, of course. So, Mr. Balogun, what are the most pressing infrastructure barriers needed to be worked on that will present the biggest wins for Nigeria's commodities market in light of the AFCFTA? Well, I guess they're having some kind of technical...
turn on mic or something.
Yeah, audio. Now, maybe we'll take a quick break and then so we can correct that audio problem and then get back to him. All right, let's now talk to Mr. Balogun. I guess everything has been resolved. And welcome to the program, Mr. Balogun. So I did ask, what are the most pressing infrastructure barriers needed to be worked on that will present the biggest wins for Nigeria's commodities market in light of the AFCFTA?
Good morning. Thanks for having me. So again, when we think about our infrastructural challenges for AFCFTA implementation, we need to think both hard and soft infrastructure. On the hard infrastructure side, it's essential that we fix our ports system. Our ports is one of the most inefficient on the continent, probably on the world. Togo port now has the largest ports in the coast of the West African trade corridor. So we definitely need to fix our port systems across the country. We need to think of roads that connect the different countries and the different trade corridors, the Trans-Saharan trade corridor, and the rail systems that will be able to help us move our commodities efficiently. On the soft infrastructure side, we need to think of We need to harmonize our trade terms, taxes, and then the codes of what constitutes country of origin. This is some infrastructure that we also need to have a consistent policy infrastructure across the continent.
Okay, considering that most commodity value chains in Nigeria remain fragmented and informal, what can be done to bring the informal trade into the formal sector so that producers can actually benefit from the AFCFTA?
So again, when we think AFCA, I'm of the opinion that most of the trade we'll see will be on the finished product side. So we'll see a lot of in the fast-moving consumer goods sector. The poultry, livestock sector would also see a lot of goods. So it will be on differentiated products rather than base commodities, because essentially each of the countries wouldn't have a lot of comparative advantage from each other, except for probably trade surpluses and deficits, which will be marginal and also low value for the stress of moving them for the distances between the countries. On the other side, what we should also start to think of in the implementation of AFCTA is how can Africa trade as a bloc? How can we, West African countries or East African countries or the SADC blocks trade with the rest of the world as a bloc? And then you have competitiveness. How can Cote d'Ivoire, Ghana, Nigeria, and Cameroon, who account for about 75% of cocoa production, trade with one bloc and one consistent pricing regime with the rest of the world? So these are things that we need to think through.
So what role do you think the commodities exchange will play in achieving some of the things that you've talked about and, of course, ensuring the overall effectiveness of AFCFTA for Nigeria's commodities market?
The exchange tries to achieve three things, which the three of them are applicable in the implementation of AFCTA. So the first is price transparency. How do you create a mechanism where if you have multiple players, multiple buyers, multiple sellers trading on the same product, how do you ensure that prices are determined fairly and transparently? Second is how do you treat settlement? So you will have multiple currency transactions originated from different countries, and then this needs to be settled efficiently. So a commodities exchange is one of the best mechanisms that can give you that sort of technology-enabled settlement process. The third part of what it does is standardization of the baseline commodities. So essentially, it then makes us able to trade maize as one contract across 5 different countries. And today, that doesn't exist. You have maize from Nigeria, very different from the standards in Ghana and the standards in Togo and other countries. So being able to standardize the baseline commodities is part of what the commodities exchange will do. And this is important to achieving the AFCA's goals.
Okay. How well prepared are we with regards to like other African countries that already have a competitive edge? If not, what do we need to do to put in place to ensure that we fully benefit from the agreement?
That's where Nigeria has a strong competitive edge. So first, we have a very deep financial market system that can support growth, and we have a large pension asset class, pension fund asset class, and other investment pools that can finance growth and form a base of patient capital for growth. The second that we also work is we have mature industries, consumer goods, cement sector, some if you understand the service sector, talent pool that we have as a baseline from sort of competitive edge and endowment that we have above other African countries. The two parts that I think that we probably are lacking behind, one is our port infrastructure, which doesn't support the size and volume of trade potentials that we have as a country. Second is the policy. I think we are yet as a country to domesticate AFCTA to us and accept it as the future of trade for us as a country. And until we do that, other countries have started having implementation committees and started hosting the implementation, the Pan-African implementation team, and having that dialogue in terms of how to get ready and how to enhance their trade policies to support AFCTA. The faster we start to do this, the better we will be prepared.
Now, we have seen the trend, the inflation rate in Nigeria is going. How do you think commodity exchanges or perhaps support for commodities exchanges can actually help to taper the inflation trajectory as it is?
So two ways. So for us as AFEX, what we've been able to do is to ensure that We raised at the beginning of the onset of the quarter an asset-backed commercial paper that financed a number of our clients, our members, to be ready to aggregate the commodities at the beginning of season. So this allowed them to gain edge on physical products against prices. So most of the clients that work with us, the members of our exchange, already have products that came in at the base price November, December, before we started seeing the huge. This allowed them to be able to then plan and be more competitive in production for the year. The second part of what we then need to do as a country, but the first is steering and pushing this with the support of the Securities and Exchange Commission, is to develop a derivatives market. What a derivatives market allows you to do is to be able to hedge against your risk, and you can lock up prices in the months in the futures. So essentially a poultry feed or a food manufacturer or a cereal maker will be able to lock up maize or sorghum for June 2021, for December 2021. So regardless of what the physical prices then is, he's still sure of being able to continue production at a planned price. What this does is it reduces the volatility in prices over time, and then the incentive for speculation and hoarding then diminishes.
All right, thank you very much for your time. Ayodeji Balogun, the CEO of Apex Commodities Exchange. We appreciate your time.
Thank you.
And to the markets now. Eddie is on board. Eddie, what do you have to tell us? Any good news?
Chimi, no good news. Unfortunately, we saw the 8th consecutive loss in the markets yesterday. That's the longest losing streak in the year. I mean, the month of January ended on a positive note. I mean, the NSE was even tagged as the best performing market in Africa, because the market ended January with a positive return of over 5%. Now that has dropped to about 3%.
Well, has it changed anything? Has it changed anything? The fact that NSE is tagged the best,
I mean, if we keep going this way and if we keep seeing these losses that we're seeing in the month of February, it's likely to change that direction or that positive, the positive performance of the market in January. Because
I don't see this continuing for
long.
Well,
I hope it doesn't continue. But let's talk more about this with Kayode Olayemi, a stockbroker at CSL Securities. Good morning, Kayode. Thank you for joining us on the program.
Good morning.
Well, I'm sure you heard what Chimi and I were just saying about the market's performance. This is the 8th consecutive loss. Now, yesterday's losses were prevalent on the banking stocks. Is it that investors have just lost patience in the market, and are selling off, or is there more to it?
At auction at so you rate 362 paper, so you stock 1%.
Well, I guess the network will not allow us to hear what Kayode has to say, but let's just quickly look through the market numbers before we go to the fixed income market. The market was down 0.13% yesterday at 41,510.16 points, while the equity cap was at 21.715 trillion naira. Now, volume was lower compared to the previous trading session, as that fell by about 10% to 305.92 million units, worth 3.95 billion naira, traded in 4,969 deals. Sectoral performance was broadly negative yesterday. The market yesterday, we saw declines from GT Bank, from Zenith Bank, from Access Bank, from UBA, from Union Bank. In the consumer goods sector, which was down 0.25%, we saw losses from International Breweries and Guinness. I wonder what's happening with the brewers. Industrial goods was down 0.04%, and that was due to the declines we saw on WAPCO. Insurance was down 1.73%, while oil and gas declined 0.25%. Now, in the fixed income market, the bond market was bullish yesterday, as we saw yields decline by about 19 basis points. Now, across the curve, average yield declined at the short and the long end, while the mid segment was flat. We had 21 deals worth 7.70 0 billion naira in that market. The Nigerian Treasury bills market was quiet yesterday. We had just one deal on the January 2022 bill worth 48.80 million naira. We didn't have any movement on the CBN special bills yesterday. The OMO market was also, it was bearish as we saw yields expand by about 9 basis points yesterday. We had 44 deals worth 166 billion naira. Now, there's a primary market auction today. I was hoping we'll be able to talk to, a fixed income dealer to tell us how the market has started off trading, what investors are expecting. But what we hear now is investors are just going to be on the sidelines, with all attention at the primary market auction. It may be oversubscribed, it may not be oversubscribed, but we'll find out tomorrow, Chimi.
Yeah, hopefully, perhaps whatever that happens, that market still again would have some kind of implications for the equities market. But either way, I think there's a level at which this drop can actually get to. But for risk appetite people, perhaps this is the time to buy into the equities when,
prices are low.
Really falling. Yeah, you buy dip, according to Ladi, as always. Buy the dip, exactly. Okay, we'll take a quick break, and then when we come back, we do an opening call to London. It's midweek. Let's get a feel of what is happening in London. And we have Juliana. Good morning, Juliana. Good to see you. Well, pharmacists in England are considering strike action unless the Treasury writes off a £370 million debt from a support package awarded during the pandemic. And that saw many chemists help deliver vaccines. What are we learning about this?
Well, any sort of industrial action involving the pharmacies will be wholly controversial, but the National Pharmacy Association and the all-party parliamentary group on pharmacies in Britain almost feel as if the pharmaceutical industry has no choice. They were given £370 million in loans by the government last year, and that was really because they were almost subsidising the NHS for about a year now. Lots of GPs, in fact, the majority of GPs across the country have stayed closed, and because of that they have been giving and offering frontline support, including, as you said, offering jabs, with some pharmacies offering up to 1,000 jabs a week. But a lot of the relief that was given during the pandemic has to be paid back, and they just don't feel that they can afford to pay back this £374 million. They have written to Chancellor Rishi Sunak. We're going to wait to see what he says on the 3rd of March during his spring budget, but they feel they would be unfairly penalised if they have to pay back this money, which is why they want him to do a U-turn and change his mind.
Calling for debt cancellation there. All right. Bear and pop sector leaders are pressing the government to give them a reopening date. Does the government have any plans for that at all for the sector?
Well, unfortunately for the sector, they're not in the top of the queue. I think the biggest conversation here in Britain at the moment is when schools will open. We've been given a tentative date of March the 8th. We're going to wait and see. We have been told by Prime Minister Boris Johnson that we will get a firm rollout a plan by the February the 22nd. It's not just the pubs and restaurants that are reeling. Everybody's reeling. I can tell you that for myself. Everybody wants to get out of this awful long lockdown. But of course, when it comes to economics, which is why really the Beer and Pub Association are making this urgent call, is because they have lost so much money. Even last year when they were open, sales were down 56%. There are losses to the tune of £7.8 billion. They don't think they've received enough help. The government, of course, are batting back. They believe that they've been offering the most bulletproof COVID-19 relief package that anyone has seen in the world. The latest of that includes the £9,000 per business grant, which was given in January during the beginning of the lockdown. But it is starting to hurt and burn. And there are questions as to if, these businesses will be viable again if and when we do get out of this very long lockdown.
Yeah, and yesterday we talked about LC&F scandal. However, a former High Court judge has publicly questioned the evidence the governor of the Bank of England has given to MPs. Where does this leave Andrew Bailey?
Well, it's an ongoing inquiry, so the Treasury Select Committee will come up with their independent decision on that basis. And the Serious Fraud Office are investigating London Capital and Finance's directors. But as you said, this is a pretty heated spat between two senior individuals, Andrew Bailey, the current governor of the Bank of England, who was at the time the head of the Financial Conduct Authority. Dame Gloucester, former High Court judge, she actually wrote the report that is leading to this independent inquiry by cross-party MPs. And what she said within her report is that Andrew Bailey wrote to her on several occasions, pressurising her not to name him independently in her findings. And she also said that when she was giving her statement last week. On Monday, when Andrew Bailey spoke to MPs, he refuted that claim. He said it made him angry. He actually said that on the record. And she's doubled down on her claim. On Monday evening, just a couple of hours after Andrew Bailey finished speaking, she wrote to the chair of the Treasury Select Committee saying that he did indeed pressurise her. And she also resent the emails. The case goes on, but like I said, it's an independent inquiry, so we'll just have to wait and see what the findings will be from the Treasury Select Committee later this year.
Absolutely. In the meantime, we'll talk to you later in the day for intraday market updates.
Thank you.
And to the cryptocurrency market, Ladi is there. Ladi, Bitcoin has tapered and the altcoins are gaining. Yeah.
So it seems the Elon Musk pump has run out of a little gas, but we almost hit 50K, but I'm sure profit taking must have brought the price down. Let's take a look at the numbers. Market cap $1.40 trillion, 24-hour volume $216 billion, down 6%. BTC dominance down 61.7%, down 1.93. What I said yesterday, once Bitcoin dominance starts to reduce, the altcoins have some time to play around. The price of Bitcoin as at this morning, $46,554, down 0.80%. 24-hour volume, $89.67 billion. Top gainers, we see Matic. Matic Network up 62%. Matic is one of the IEOs from Binance Exchange, doing well. It's been asleep for a while, but starting to wake up. The other day I spoke with Gaius. He talked about the possibility of an IEO season. That might be playing out here. We see BNB up 53%. BNB, that's the exchange token for the Binance Exchange, one of the biggest exchanges in the world. And now we have OKB down here, another exchange. So there might be some kind of exchange token play going on also with the IEO season. I'm supposed to speak to Solomon Amunde. I don't know if we have Solomon Amunde right now. Hello, Solomon.
Yeah, good morning. Good morning.
Good morning, Solomon. How's it going?
Very fine, very fine.
It's great to have you. I see Matic is up this morning. Are we looking at IEO season?
No, not really.
Okay.
Matic is actually, Matic is up because they are providing a kind of Polkadot system for the Ethereum interface. That's layer 2 solutions for scaling issues. That's why they actually up. So they've been pumping since last night.
Okay. Interesting. So I remember 2017, it was all about ICOs, but I've not been hearing about ICOs for a while now. What is the reigning trend? How are these companies raising cash at this point?
Yeah, the crypto ecosystem is always evolving. 2017 was ICOs and 2019 was IEOs. So 2021 now is IDOs. That's what's trending right now.
IDOs.
That's initial decentralized exchange offerings. So you have the likes of data and the likes of pools.finance.
Okay.
So what this platform do is you have an idea, you want to raise funds for your crypto project, and you just hit them up and you send details about your idea, and they vet the whole process and all that you're bringing to the table, and they just hook you up to investors. So they are doing like what Microtraction is doing in Nigeria and what Y Combinator is doing in the US. So that's basically what they are doing in the crypto ecosystem.
And how does one buy these IDOs at this point? Is it the same process as ICOs?
Yeah, no, it's way better than ICOs. Like the IDOs I've participated in, I did one that was last week, Boat Ocean, and immediately I got in with about $200, and in less than 30 minutes, it was up to $2,000.
Wow.
That was like 10x. Yeah, and 10x. The one I did for paid has gone about 5x. That's paid, and paid was January this year, from about 5 cents, and right now it's about $3. So you can imagine, and you only get in the IDO. After the IDO, you can't. And the IDO is pretty tough to get into the IDO. You need to be whitelisted and you need to meet up so many requirements.
I can imagine.
So it's not really easy. Yeah.
Okay.
So this is something that most traders have no idea about.
Yeah. All right. So looking at newcomers into this trading, this market, what would you advise them, playing how to minimize risk? Because this market is very risky. It fluctuates like crazy. How would you advise newcomers in this market?
I think one major problem with newcomers is they love to buy the hype, and they FOMO a lot.
Yeah.
They let the fear of missing out get the best of them. Like you can see what happened in Dodge.
Yeah.
Immediately everyone started hearing about this. Everybody was buying Dodge, and they were buying high. So it was inevitable that they would. Yeah. So I would say the newcomers should educate themselves, and they shouldn't be in a haste to invest.
Do your own research. Yeah.
Yeah. Do your own research. Very important. And have a guide. It's really important that you have a guide. Because these days there are so many scam tokens, tokens.
All right,
so
Samuel.
Have a guide.
All right, Solomon. Thank you so much for your time, and do enjoy your day.
Chimmy. Yes, I can actually ask now, what dip now can I look at? Now, you are my guide.
Well, BTT was up about 100% yesterday, or was it 200%? Well, it's down 11%, but you know how this market goes, up and down, up and down.
Dodge or Ethereum?
Jimmy, I don't know about that. You have to do your own research at this point.
All right, thank you.
Yeah.
Well, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.